Hi everyone, welcome to our market talk. So 2 weeks have passed. Not much going on. Major levels in indices were tested, and there is quite a big divergence in the market. Also, stock bond correlations are crazy. So I'm sure we have a lot to talk about what we see and what is the plan for us to approach the market. So yeah, let's start maybe with Raphael this time. So Raphael, what you see in the markets and what are you doing?
Hi, Rai. So I'm starting to watch the correlation with big interest currently. So I'm gonna, of course, share the screen, and we're gonna start with that. Usually it's you talking about correlation, but yeah, you allow me to talk first. So I'm gonna talk about it. So let's go. Okay, let me hide this so it doesn't bother me. Okay, should be good. Okay, so the first things to note regarding correlation is that the stock bond correlation are now positive. If you remember when we did the show 2 weeks ago, the correlations were negative. I explained my reasoning as to why it was negative and why they would actually at least go back up. I didn't expect them to be that positive now. So you can see here, TLT, QQQ, SPY, they were, so you can see here, 30-day correlation were negative before. So that's a big change. They are positive on the 5-day and on the 10-day. So we are basically back in the regime we were prior to the deflationary sell-off, you know, that everybody was talking about just 2 weeks ago. Now I wonder what will be the new narrative. Then another thing to note is the fact that sure, stocks and bonds are correlated, but two other things is gold is highly correlated to stocks. So you have gold, stocks, and bonds basically moving together. And the third thing that is quite of interest is negative, highly negative correlation with the dollar. So you can see here, it was already negative 10 days on the sorry, it was already negative. When was that? Last week. I forgot when I tweeted about it regarding the dollar, the gold, my gold position. But now it's becoming absolutely insanely negative. So this is one point I'm quite worried about. So I'm watching it. Apart from this, so we used to have for the past few weeks a not so interesting upside downside ratio on most tickers that we are watching to add to. Now it has changed. So you can see here, I have organized upside downside ratios based on favorability. And you can see that, for example, QQQ, NDX, Apple, SPY, so this is also S&P, this is DAX, NVDA, etc. They are starting to show very interesting upside downside ratios. So now we have to consider the correlations in conjunction with the fact that upside downside ratios are pretty favorable. So this is a very, very tough nut to crack. So I'm going to go to NQ first, and I'm going to share my thought on it. I need to deactivate one stuff. Okay, let's go. Okay, so 2 weeks ago, I expected NQ to provide a sell-off after reaching trend. We didn't get it. We actually got a burst above trend. But since then, all we got was chop. So I have actually matrix rolling over. I have a volatility that is still quite high. And I'm going to address that later, but a lot of tech stocks are actually not looking that good. So for now, I would not buy the dip just yet. I would wait for at least a retest of the low of the range and continue to monitor the stock bond correlation as well as the dollar versus stocks correlation. Because these things are quite worrisome for me. So for now, still bullish, looking for a test of the low of the range to add, but quite worried about the very negative correlation with the dollar, and yeah. Regarding Europe, so I mentioned last time that FTSE was the only one bullish among the three I'm watching, so DAX and CAC. One has joined the party, so you can see here volatility is quite good. You have a trade below trend, you have volatility at the floor, you have potential on matrix, which is it's basically momentum measure in another way. So FTSE continue to look good. DAX joined the party. If you chased on the break of trend, well done. It's exhibiting the same good stuff we want to see in a bullish position, trade above trend, volatility down. So any retest of maybe the low of the range in this area, I don't see any problem to add to this one. The Nikkei is back to bullish. I think on the last show we were below the trend. The issue is it's highly correlated to US tech, and for now, as I mentioned before, I have some issue with tech. And again, I will do a dive on the tech stocks and why actually they are worried. So then we go to DXY, the dollar. So this one is of course key. And then I'm going to go to yields. So this one has had volatility just rising. You can see it's right here at the bottom. Volatility is rising since it's a rejected trend on that day, 31st of July. It's just dump after dump. But now it's oversold. It's oversold. So considering the correlation with everything I've said before, this should be one of the #1 stuff you are watching. When will the dollar actually bottom and bounce? One thing that happened also recently was the fact that DXY had a cap to the downside, and the cap is now removed. So when I saw the cap, I saw that I had oversold. I expected the bounce to happen now, and suddenly the cap is gone and DXY continues crashing. So it seems like the bounce is not for now, but this is something I'm watching daily. Also, something for the deflation crash people. So dollar dumping is not something you want to see when there is a recession. And just to tell you, huh? So let's go to yields because they are very, very, very important considering the fact that they are now highly correlated to stocks. I mentioned 2 weeks ago that I expected yields to remain in a chop box. So I drew this to see it visually, but this is what I'm expecting. I'm expecting bonds, yields and therefore bonds to remain in some kind of chop until we see the volatility gets back down and probably yields go back up. So that would explain maybe why for the past few days we've experienced the chop in tech, for instance, in some other highly correlated asset to yields. Now I want to go to the tech stocks. So also again 2 weeks ago, another reason I unloaded my long position from the bottom was the fact that a lot of the tech stocks were unable to reclaim trend. And what we saw in the past few days was actually a confirmation of the fact that they were unable to reclaim trend. So some of the big names that are in this situation are Google. So Google has been unable to reclaim bullish trend. Its volatility is still rising. Its trade of vola is still rising. Another one is Microsoft. So Microsoft went to trend, MFR trend. You will see here, rejected. Now dumping, vola still rising. You have Amazon. So same, tried, failed, vola still rising. So that can explain also why, and Vi will go into this, I bet, why tech is not performing as well as other sectors. Now let's go to VIX. Okay, here. VIX is here. So what we've seen in the VIX was actually something to be expected. We saw a crash of the top of the range. It went from 27 something to basically 18. For now, yeah, it's around 18. And yeah, we are coming from 27, 29 and just crash. So this is not surprising after a vol event. And I have big reserves expecting, entertaining the idea that we would get another VIX spike after this. So for now, I don't see VIX getting back up like crazy. I would expect at most retest of the top of the range. Currently, I have VIX oversold, but this is not surprising considering what we just had. So for now, I don't see any issue regarding the VIX. I'm not expecting a VIX spike. So yeah, I think the problem are more toward the dollar and yields. This is what you should monitor. CL, so USO if you are trading the ETF. So like I said 2 weeks ago, this is just chop. I mean, sure, you can have fun trading rejection of the top of the range, top of the any retest of trend, but this is just chop. There's nothing to do there. Actually, Bitcoin looks the same. I also mentioned that 2 weeks ago. It's bullish on MFR, but I'm looking at the vol, and the vol just say chop. This is chop for me. So again, I see people longing Bitcoin. Good for them. Maybe they are right, and ultimately I'm wrong. But all I'm seeing right now is just chop. So I'm not taking a position there, especially considering that Ethereum looks absolutely disgusting. It rejected any attempt to break above trend. So we had the Ethereum confirming bearish trend here. And just now we had the attempt, rejection, and vola is still rising. So I don't know. Maybe I'm wrong, but all I see is chop. And yeah, let's conclude with gold. So gold, my worry right now is the correlation with dollar. Still bullish. Volatility looks good. I expected a move up to the top of the range, consolidation, then another move up. This is still my base case. But again, I'd like to see the correlation of the dollar with everything else to go back down. That would be much better. One asset I'm watching is silver, actually, to get long. So it's attempting to break back to bullish. The issue I have right now with this one is I'd like to see trade of vol go below its trend. Once I see that, and I see volatility remain on the floor, I will take the position. So I'm currently waiting because I got a sell signal actually yesterday, I think it was. Let me check, or maybe today. Yeah, I got to sell today. Okay, so usually what happens is you got a retest of the low of the range. So I want to see the behavior of silver at the low of the range. I want to see if we have finally the cross of trade with trend. And if it holds, I'm going to initiate a position long silver. If so, if the volatility is doing what it's supposed to, I'm expecting a move like we had in February up to May. So that's what I'm watching. But again, it will depend on the cross correlations. I want to see other stuff behave as well. So yeah, I think I've done. I've explained what I'm watching. That's your turn.
Interesting. Thanks, Raphael. I hope you noticed also regarding VIX that finally ranges came back to normal. Both longer term and regular term, and ranges are not wide, which, if I remember, is one of the fastest coming back to normal for VIX after any spike ever, at least what I saw before, which is really interesting. Okay, so Ted, what macro regime are we in? Buy the dip or sell the rib?
I think it depends on where you're positioned, to answer your question. I will share my screen and kind of walk you through sort of a high level picture here. Bear with me 1 second. Start my show. Yeah, so again, I'll touch on the macro regime. And I'm going to touch on it not so much from my perspective of any macro guru perspective, but moreover from what the Fed's looking at, which I think is a pretty powerful force. And then talk about positioning and then look at some charts in terms of where I am. So as I mentioned, unchanged, my favorite macro guru has us in Goldilocks with deflation characteristics. And basically what that means is both growth and inflation are battling for, inflation is down in either environment, but Goldilocks suggests that growth may be stabilizing to moving down, whereas deflation's down. But more importantly, what's the Fed looking at? So Jackson Hole's speech was on Friday. Powell, these are some excerpts from his speech at Jackson Hole. He says inflation has declined significantly and the labor market's no longer overheated. It's cooled considerably from its former overheated state. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. And then he said very clearly, the time has come for policy to adjust. The direction of travel is clear, and he means down. And the timing and pace of rate cuts will depend on the incoming data, the evolving outlook, and the balance of risks. So what's the Fed looking at? The Fed's looking at PCE inflation, which we got a report on Friday, updated for July. The June number was plus 2.5% year over year, declining. The CPI rate in the US continues to be, oh boy, what did it do there? I always touch the button. I don't mean to, apologies. But the CPI inflation running 2.9%, which was below expectations. Also, I included a chart the New York Fed puts out, which is called multivariate core inflation. Basically, what it shows is the persistence of inflation in the 17 indicators that it has. And you can see that while PCE inflation appears to be flattening out, the persistence of the inflation continues to trend down. So the Fed's looking at that and saying, hey, we're moving in the right direction. Powell says he's got more confidence. We're coming into PCE on Friday. I think that'll probably, if it deviates from where this expectation is, we may have a move, but Cleveland Fed has us at 2.56, consensus has us at 2.56 headline, and core at 2.6. So again, these are steady numbers. And then when you look out a little bit further into August, PCE itself is projected to come down, whereas core may come up some. Then taking a look at the unemployment situation. And what I pulled together this week was a series of charts that show unemployment, or show a series of charts from 1998. These are put out by the Federal Reserve. And what you see is U3 and unemployment in 2000 starts to tick up. 2001, we start to get that tick up. Recession. We start to see unemployment tick up in 2008. We get a massive recession. Very aberrant situation in 2020 with a very short-lived recession related to COVID and pandemic. But here we are again, the unemployment rate clearly starting to tick up. So I'm sure they're concerned about that trend, and they're concerned about what that means, and they're focused less on inflation now and more on unemployment. We touched on the list of the last few weeks. Somme rule triggered. That says we are in recession. People are saying that's not the case. So we'll never know until those that rule on recession tell us that we were in a recession. The other thing that's interesting is Fed funds rate. You can see with each of these periods of time, back in 2000, we saw a peak in Fed funds around 6.5. Shortly thereafter, as rates start to come down, as the Fed starts to cut, inflation, recession starts shortly thereafter. Again, back in 2006 and 7, rates up, rates start to come down. And then going into 2020, we also saw this peak in rates come down, recession followed soon thereafter. So here we are today, 5.25, 5.5, level very consistent with 2006 and 7, and we are beginning a rate cut cycle. The other one that I've been following for a long time and has been a good recession indicator, which hasn't yielded anything over time, is the 3-month bill over the 10-year bill. That has been deeply inverted for a long period of time, and the deepest inversion in the last 20 years. And it is one that I am watching because I am very interested in the steepener trade. We are going to get a steepener, but what you see is every time this thing goes out and unsteepens or breaks above that zero line, recession follows soon thereafter. So the Fed pays attention to this, and so as investors and as traders, we need to pay attention to this. The other thing they should be paying attention to, and likely are paying attention to, I plotted GDP Now, which is the Atlanta Fed's nowcast that they put out. This is the data behind the numbers from Q2, and this is the Q3 data, and you can see we've gone down from 2.8, 2.5, 2.9, and then 2.4, and then 2%, and yesterday's number was also affirmed at 2%. So we've got a little bit of a tail off in growth. We've seen that before. This number is pretty volatile, but it's showing that growth is trending down, or at least let's call it stable. So Powell comes out on Friday. How does the market react to this? So this is updated as of this afternoon. This is the Fed Rate Watch tool, and basically what this market is saying is that we're looking at 75 to 100 basis points of cuts over the next 4 months between now and December 18th. So you can see consensus is pretty much on 25 basis points, but then we're anywhere between 25 and 50 basis points in the November meeting and another 25 basis points in December. Now this varies all over the place. We had a similar situation at the beginning of the year, and then we had a little bout of inflation, and all bets were off. The additional thing, and Raphael pointed out, is, dollar has just fallen out of bed. It put in a year-to-date low last week. I think it closed lower than that today. Tried a little bounce yesterday. I will look at this a little deeper, but basically you've got dollar selling off, and so as a U.S. investor, or one that has to invest in dollars, that pushes me out to a different set of parameters, and I'm looking at non-dollar oriented investments, or those that will benefit from the dollar continuing to go down. So from a macro view point of view, I see growth stable and slowing. Inflation continues to trend down. Employment is weakening. The FOMC is loosening, or intending to loosen, and we have this going on. We have Japan with a growth rate of 3.1%, an inflation rate of plus 2.85%, and a policy rate of 0.25%. So deeply negative real rates. They are trying to move their rates up. We saw what happened in July and August as that sort of yen carry trade started to unwind. I don't think this is over yet. You have two of the largest economies in the world with interest rate policies that are moving diametrically in the wrong direction, at least from a dollar investor point of view. So I've talked about this portfolio, which is the one that I tend to work on most, and I've got a systematic trend that portfolio that's updated weekly. It invests in fixed income, equities, commodities, alternatives, and FX. All the position sizes are volatility adjusted position sizes based on realized volatility. Stops are limited to 25 basis points of capital, and I have weekly reversal signals from extremes, and I think that's an important part of the discussion today as I move forward. You can see that as realized volatility in my portfolio has come down over the last 2 weeks, my bond positioning is pretty consistent at 24%, started to move up. Equities have moved considerably higher. Commodities, meh. Alternatives, consistent, a little bit more. And currencies, which in this instance are all non-dollar currencies, and I just trade the ETFs, and then cash position has come down almost 20 points since that time. So in terms of market signals, US dollar is weak and weakening. I'm long ex-US FX or currencies. I'm long bonds, especially EM. I'm long international equities. I'm long the steepener. I'm long gold, and I'm keeping an eye on commodities. And the reason I'm keeping an eye on commodities is because as the market front runs things, they start to bring forward the next seeds of reflation or inflation. So that is a concern area because we had that. Everything seems to be happening at a more rapid rate. We had the same situation at the end of last year kind of develop. And so I'm paying attention to that and keeping an eye on commodities. From a charting point of view, just making a few adjustments here without messing things up, hopefully. Anyway, we'll start right here. So this is the dollar chart. Just make sure that's updated. You can see we put in a fresh low today. This is the weekly chart. I'm going to show you a series of weekly charts followed by daily charts. And you can see the dollar has attempted a couple times. These are my weekly signals to get me long the dollar at the low end of a range. And so I got long here, stopped out, got long here, stopped out. So trying to get long the dollar has not been a successful enterprise. And so I haven't spent a lot of money or time doing it. And you can see after the Fed came out on Friday, basically any sort of movement higher in the dollar got punished. And so it's like Raphael said, it's definitely oversold. It can continue to get more oversold. I mean, we're coming into DXY 100. I don't know. So I'm just, as a US investor, my dollars are worth less. And so I want to be allocated to places where my dollars are going to convert at a higher rate. So one of the areas that I've been sharing with you is that I've been long FXY, had a good position coming into this. I had a sell signal. It has since reversed. I did not add to the position. I got long the position. I got out of the position, maintained a base level position. It is kind of flattening out at base in here, but still trending higher. I am not, I've not added to the position, although my system wants me to allocate more, but I need to see it come back. I need to see a pullback. Similar situation with the Swiss franc FXF. This has continued to perform really well. I got long here and here. I took some off when I got a weekly sell. You can see that here. This was on August 5th date, just a big day. I have not allocated more. I did cut the position, but I'm still holding the position and is trading at 3-4 month highs. Similar situation with FXA. It gave me a signal only three weeks ago. I did get long in a decent sized position in FXA, which is the Aussie. And this is where I got long. It gave me a signal on the 9th, end of the week. And I have not been able to allocate anymore because the thing has just gone straight up. Same with the Canadian loonie. Same signal, long, still holding the position. I actually added some yesterday. Just because my position wants me to my system wants me to double the size, and I'm not getting any pullbacks. So you can call it chasing if you want. Wasn't really chasing, but I did allocate more capital to it. This is PDBC, which is the optimum yield diversified commodity strategy. It gave me a signal several weeks ago. It's been quite weak, but yesterday it had a decent move on oil. It's kind of bouncing around. My stop has not been hit, so I am still long a small position in commodities, and I continue to watch this. These are my trend. This is my trend level, which is 3-month trend, 55 days technically at the end of that last week, and you can see it's still bearish trend. So my reversal signals do get me long bears or sell bulls. So it's something that I pay attention to, something I watch. I have a small position in this. Likewise with energy, XLE, equities, a signal came a couple of weeks ago. I did get long a small position. It is still bearish. It doesn't look like it wants to break higher, but I have not been stopped out yet, so I continue to hold the position. Another position that I have is in INFL, which is Horizon Kinetics Inflation Beneficiaries ETF. I've had this position open for quite a while. It has done really well. It is invested in oil companies. It is invested in miners. It's invested in wood and lumber companies, and it has performed really well. I've not added to the recent positions, but I'm continuing to watch it. I do have stop in place. It's I don't know exactly where the stop is, but it's something that I maintain long. And here you have inflation-oriented assets that continue to perform well in what ostensibly is a declining inflation environment. TLT got a sell signal a couple of weeks ago. I maintain a small position. You can see I sold the bulk of my position. It's a place where I'd consider adding right around now. It has pulled back, consolidated some. It's clearly in an uptrend. That said, my position, my system's not telling me to allocate more capital to it, so I'm keeping capital where it is. Where I am have been long EMB, which is emerging market bond, for quite a long time. It has continued to perform well. I do want to allocate more to this because emerging market bonds have A, they yield a lot, and B, it's just continues to rip higher as the dollar continues to come down. So this is a position that I will continue to build when opportunities present. I'm not going to chase it here. Interest rate volatility. This is IVOL. This is my play on the steepener. It got me long at the right place. I took some off coming into, I don't know when that was, the end of July and August 5th. Sold some. I'm continuing to allocate, and in fact, I bought some more on Friday. I need to double my position in this according to my system. So I'm building as I have an opportunity as it comes back, bases a little bit. My expectation is this continues to go higher. as the Fed starts to cut rates, and we'll see what the long end of the market does. I don't think the long end, the duration end, is going to be productive. I think that's probably going to stay pretty high. So I'm not allocating too much to that space. TUA, which is, we talked about that last time, it basically is a leverage play on short-term interest rates. I think this is a winner. I allocated here. I sold some in this area. I sold a little bit more here, and I've started to allocate again. So it's just one that I want to own. And it's certainly in a bullish trend. So I'm going to continue to allocate when the market gives me pullbacks. Gold, what's to say? Top end of the range. We talked about this last time. Each time we've met, the thing sold off a little bit. Seems to be hanging in there. We're at all-time highs or near all-time highs. I have an okay size position. My system's not telling me to allocate any more to it, so I'm holding. VIX, what I'm observing is that, we sat in this boxed range for months where basically traded between 11 and 15. And now that appears to be sort of establishing the low end of the range. I don't know that this is a one and done volatility event. Maybe it is, maybe it was just a thunderstorm. I'm paying attention. What didn't happen for me, I did get out of SPY and Qs well in advance of the August 5th sell-off. It didn't, however, sell off enough for me to get long. I didn't get long SPY until my system got bullish again. And so at the end of the week, last week, I allocated some to SPY. Chasing local highs, maybe, but this thing went from neutral at best to back to bullish. And so I used my discretion to get long that position. I don't love it. On the other hand, what I did get long on August 9th, I got signals at the end of that week to get long EFA. We got long here. That's developed markets, continues to do well, trading now back into a bullish area. I want to continue to allocate capital here on pullbacks. Same with FES, which is the Euro Stock 50. I got a signal on the 9th, got long, I think this one on the 12th, and continues to, I'm a position trader in this instance. I'm not trading in and out. I'm just holding on to the position. My stop moves up every week as the market moves higher and as volatility comes down. So I like this, and I want to be allocating more to Europe as we move forward, at least for the time being. That's subject to change at any moment. Same with EEM. Got the buy signal back on the 9th. Bought it on the 9th. It's not doing quite as well as some of the others, but I continue to allocate capital here as it bases. I think it's getting ready for a move higher. Almost done. These are my final charts. These are all dailies. The dailies, I went through this the last 2 times. It's all defensives. So this is, and my point here is that defensive sectors and factors have never really looked back. This was August 5th. Yeah, we got a pullback, but it wasn't as damaging in these defensive sectors. This happens to be high dividend. It continues to perform reasonably well. This is low volatility. Again, breaking out to all-time highs, just continuing to churn higher. XLP, staples, higher. XLRE, real estate, amazing, higher. XLU, a little bit of topping going on here, but has put in an all-time high as recently as yesterday. So again, defensive sectors continue to do well. This is healthcare, again, all-time highs. So, capital is still being allocated. It is going into these defensive sectors. My dynamic positioning portfolio does not utilize these particular ETFs, but I do trade some of these in my other account. So that's what I've got to say. I'm basically I'm short dollar. I guess across the board. I am really looking forward to more in the way of the steepener. That said, if the market doesn't work with me, I get stopped out, I'm out. So that's what I got.
Thanks, Ted. Very interesting. And yeah, stops are very important. I wish more people would be talking about that. Yeah, so interesting signals, interesting markets. Let me share my screen now. Yeah, so first of all, about the VIX, and those who are monitoring ranges and signals on MFR noticed that. I hope so that after this crazy fake spike, in my opinion, it's fake, but I will not talk about that. Ranges came back to really normal diff. So volatility came down. Now the question is whether it will stay here or not. And I want to show something that is really interesting and that shows the opinions of market participants is that implied volatility for the VIX. We have a huge premium, a huge implied volatility discount to the realized volatility. Of course, it matters a lot that the realized volatility is slow to change. It depends on the period, of course, but we use 30 days. So, of course, until this spike is not included in the period, until it's included, realized volatility will be way higher. But overall, from options market, 85% implied vol on VIX is not high at all, because for VIX, 85% implied vol is nothing. We added implied volatility data for major indices, including SPX and VIX and DAX and some others. So it's important to monitor. Now, what is driving the market? What is driving the market from correlations perspective? So 2 weeks ago, I was talking about the major levels in futures, and I showed how to get those levels and why they are important, because markets have memory. But anyway, we had interesting situations in the last days, especially in NQ, because when, for example, ES, when it crossed above 54.71, which was a major level, which was June final settlement price, when ES crossed above 54.71, it never looked back. On the day it crossed, it was a very strong level. Price spent a lot of time there, but once it crossed, it never looked back. So yes, it's strong, and I still think the same as I tweeted, that closing above that would lead to all-time highs. I still think that yes is on our way there. Of course, trade what you see in the markets, not what you think, but that's why I always use every single day opening range as my levels to execute. But yeah, I still think that yes will go to all-time highs. Now NQ is a different story, and NQ is very weak. NQ is very weak because even though it's tried to cross above 19,747, it failed. It actually tried multiple times. One was on the day when we had a ticker show on Twitter, I believe, or the next day after that. And the second time was just a couple of days ago. But every single time it tries to do it, it fails the next day. So it's important to note that there is a big divergence in strength signals for NQ versus ES. So in this situation, ES is strong, NQ is not. Now, what is driving ES? What is driving ES? And Ted touched on that when he was showing you charts. But let's start with 10-day correlations, and let's start with sectors. So first of all, average sector correlation to SPY is going down. Of course, yeah, we had warning signals in in the end of June, and when in July this trend started, of course. So when that sell-off happened, these correlations were crazy, but now we are going down, and the current level at 65 is kind of normal. You can consider it a normal regime, actually way normal regime compared to even low correlations or high correlations, because 0.6, 0.7 is what you would expect, because almost always some sectors are very highly correlated to overall market, think tech and etc., and other sectors are not really. So yeah, think energy and so on. And we can see that same thing in this chart, which is a three-dimensional view of correlations, average sector correlations across different periods and across different dates, how they were changing. So of course, in July we had even some negative values. Now we had in the short-term correlations, we had this blue line, which is high correlations period, but overall it's ending, and now we are in quite normal regime, and this quite normal regime will help, I think, the markets to do what they want to do, and of course markets are designed to go up, but not tech. And why not tech? So what is driving this move up? What is I started with that, and finally I arrived to what is driving that. And from sector correlations, we can see the 5-day delta in 10-day correlations, and you see as the normal correlations are going down, almost on all sectors, but not on all sectors. And we see that the change in correlations for XLU to SPY is actually positive. Correlation changed by 0.10, and also XLY correlations also have changed. So now basically you need to understand that if SPY is going up, the major rotation that started a couple of months ago, basically, if SPY is going up, we see that these more defensive sectors actually are going up, and you will see that in charts. As Ted said, XLU made a new high yesterday, and I'm still very bullish on XLU. On all signals look very well. So yeah, worth mentioning that XLK 97 is normal. I mean, it's tech. What can you expect? Most sectors are on a pretty normal correlation levels. Energy is, I mean, always lives, it lives its own life. So energy is always something that you shouldn't be surprised to see lower correlations. Financials, now, of course, with financials, we are in a period where everyone is waiting for and predicting and waiting and already front running and trading based on interest rates, decisions and other environments. So it's normal. But yeah, as you can see now that even though XLU had an extremely low correlation, it's moving. That correlation is going up. So this one is worth mentioning. So now stock bond correlation. Raphael touched on that, and I saw that people on Twitter are talking about that. So yeah, on a 10-day basis, stock bond correlation is positive, but now look at the signals for bonds. If we go to TLT, now you shouldn't be surprised by equity markets. Market indices are choppy on these days because, well, at least for me, this TLT is very choppy since our last show. I mean, basically nothing happened. Of course, those who are catching very short-term moves, they will disagree and say, hey, we got 4 days up, then we got a couple of days down. But overall, nothing happened here. But bonds are bullish. So bonds are bullish and positive correlation. So worth keeping in mind. Now regarding dollar, I will not try to scare people, and I'm not as worried as Raphael is. I think that instead of being worried, you need to use that. So it's based in my process and my model. It just adds another plus on the reasons why I think ES will continue to go up. Of course, we will see what will happen, but negative correlation with dollar, and dollar is being destroyed. So yeah, if dollar is being destroyed, SPY is going up. So as I said, always try to take different signals and different information and stick it together. Otherwise, it will not make not make a lot of sense. That's why I'm always starting with this. You take correlation and you will add that, and then we will go to Hurst, because actually Hurst exponent is very, very interesting in these areas. And you add also implied volatility, and of course trends and ranges, and then you see and macro. I know that I'm very bad at macro. That's why I never talk about it. I mean, my macro is prices going up. Okay, good macro. Prices going down, bad macro. So it is, I mean, but it works. And I mean, most likely it's because I'm more of a trader, but intraday trader. But yeah, prices going up, macro is good. So yeah, okay. Now let's go to my fractal range, and let's go to watch list. Basically, where am I? Yeah, something happened. Okay, and now guess which company, which mega cap corporation has a very, very high Hurst exponent. I mean, it will be easy to guess. It's Microsoft, and to see values of 0.8 is actually wow. To see 0.8, and now when we filter by Hurst, what we see here, of course, there are a lot of duplicates here, but it will not change the fact that top is, of course, Microsoft, but then we see SPY, QQQ, and of course, Nasdaq index, and so on. So this you can ignore because, I mean, NDX and QQQ is just a duplicate in my watch list, but basically, SPY and the ES have a very high Hurst exponent, and at the same time, IWM has lower. But I just wanted to talk about Microsoft because Microsoft is basically trending very strong. And if we go to that direction, basically this number should not be good news for bulls, just because, I mean, 80% chance of continuation is not what bulls want, that's for sure. Okay, so now the views on the markets. Maybe at first I want to address the question that I had about stock bond correlations and these changes. So I think that what I just said, the most important thing to watch, and what I want to repeat over and over again, that doesn't matter what you trade or watch bond signals first. Bond traders are smarter than equity traders, and I mean, I will receive a lot of hate for that, but bond traders are smart. Watch signals on bonds, and even better on things like ZN, etc. And then you can, based on that, trade equities, because if you watch stock bond correlation, but the only thing then when you check stock bond correlation, if the only thing you check signal wise is your favorite stocks or ETFs, it's not the right way to do. Even if you don't trade bonds, start with bonds and the dollar first. But the dollar is, like I said, it's worth watching. This situation, let's say, is not normal, not what you would expect. But also, I would agree with Raphael. Raphael said a very good thing. I mean, do a backtest, scroll through financial charts that include major recessions, financial crisis, and so on. And what we see now is not a recession price action at all. So Raphael was absolutely right on that. So let's move back to futures. So what I wanted to show is that the major level of 54.71 is here. If you need a refresher what these levels are, it's where June, so previous contract final settlement price, where it expired. So, and we see that when ES closed above, and it happened here, basically, I mean, it never looked back. It's strong, and ranges are making higher highs. So, and actually high end of a regular range is above all-time highs. So just another thing just another plus to add to the hypothesis, but overall, so strong first, ranges are sloping upwards. We are moving away from the major pivot, quarterly pivot, let's call it that, 54.71. It looks good. Now, NQ. NQ is different, and I mean, it's totally different. And the major pivot level is actually let's say it's 747, but it doesn't really matter because NQ is a very thin market. So when you take some level, which is exact level, you can easily say that it's somewhere between 740 and 750. Because thin market, it doesn't move one tick at a time anyway. So, and we see, okay, so I tweeted when the market was still trading here that if NQ closes above this level, then I mean it will be even easier for ES to go to all-time high because then both will be above that level and things will be good. Well, it tried, and actually it tried a couple of times. But that's exactly what I said, that every time it tried, it failed. So yeah, it's a chop, and the main reason why I'm calling it a weak market is basically because we are below here. We are below here, and today we closed here, also below here. So settlement is almost 100 points below. Of course, keep that in mind because from trading perspective, it's not that easy intraday because regime switch is easy to explain. If it closes above or if it closes below, even better. If 2 days close above or below, I mean, yeah, this one is easy. But for the execution, these levels, and you can, a lot of people already notice that when price reaches these levels, because before something happens significantly, so breakout or the reversal, it will stay there and will chop. So basically, it will kill both people who are trying to buy and both people who are trying to sell. So it will just chop up. So be careful. But basically, this is a major pivot. This is a major pivot for tech stocks. And now, based on this price action, even better if it stays there, because of course, if it just closes one day and we are in this choppy environment, maybe wait for another day. But this is important. So 54.71 and 19.747. I will also show what I have not was not talking about the last show. So other two beauty. So let's first go to Russell. And basically, M is the letter for June. It already expired, so TradingView tells you that it doesn't exist, but actually it exists. You just need to click enter. So whatever. So and the final settlement price for Russell was 2015.5, and actually this situation is even more interesting. It's even more interesting because. Yeah, let's hide the ranges first, just to see the clear sight. So when this sell-off happened, you already know that both NQ and ES went way lower from the quarterly pivot. So when the sell-off happened, both NQ and ES went. ES went to 51 handle, NQ went to 18,000. Even yeah, you get a point. But actually, when the sell-off happened, all Russell could do is basically go back, retest that pivot. Of course, it's not even a percent, because if the level is 15, I mean, the low of this candle was basically 20. Well, let's say 1%. Okay, so and then it came back above very fast and continued higher. So even though Russell still has quite a few points to go to its all-time heights, but I just wanted to mention that after the June settlement, Russell had a very huge rally. So even this sell-off couldn't take it much farther away from that quarterly pivot. And the last one is YM. The last one is YM. So first check where that price is. And that price is 39,262. The important level to watch, 39,262. So yeah, so where is that level? That level is basically, yeah, so same actually situation with Russell. Actually, because the sell-off couldn't do much harm. And again, it's quite based on what Ted and Raphael and I was talking today. It's quite easy to explain with a bit of hindsight, of course, but yeah, because of not being 100% tech. And in case of Russell, well, it's not a lot of big tech. Actually, I want to tell a joke. I had this conversation recently with our futures trading trader where we were talking, and actually he said, you know what? I had this idea that actually, usually companies, then they grow bigger, then they start making money and so on. They are being included in some index, S&P 500 and so on. And he said, I just realized that if a company is doing well, it's actually being removed from Russell index because it's growing. So yeah, so it's just worth noting that basically, if Russell has some really good companies with a bright future, guess what? This company will not be in Russell soon. So yeah, anyway, these levels are very important. So my view is that basically I'm overall bullish equities, but I'm not touching tech to the long side. So yeah, I think Raphael is on the same page with me, but if I'm not mistaken, but basically I'm very bullish XLU. If we get another dip, I will add to those positions. I have a SPY Iron Condor still. That Iron Condor will expire in September, I believe. Yeah, September OPEX. Yeah, and I'm trading futures intraday, but yeah, this is my view. Manage your risk, and I just wanted to show you why I think that things for overall diversified indices are not as bad as, for example, for tech. Yeah, so that's it for me.
If you have any question, please send it in the chat. Now is the time. There was a question regarding bonds. I need to find it. Somebody sent me in private. This is from Chris. So he was asking for the insights regarding the 20-year rates and something like TMF. So it said that the TradingView scripts were suggesting TMF was buyable on the daily, but weekly it's overbought. Okay.
I think this question is for you because I would never use any of my tool on weekly, so
yeah.
It's just the wrong way. Yeah.
So yeah, regarding the scripts, so I have mentioned this also several times. I use my scripts on daily and hourly. So and then for day trading, I will feature, as I mentioned in the one video, is a 3 minute, 15 minute, 1 hour, 2 hour. But for the view regarding swing, it's daily first, and then I will confirm the exact entry on hourly. So I'm not looking at weekly. If you find a way to use it on weekly, good for you. Now regarding bonds, so I'm interested to know your guys position. But if you are thinking about buying bonds right now, that means you are betting on continuation of the move down in the dollar, and you are betting on the continuation of the move up in gold, in SPY, in QQQ. So, I mean, if I'm looking at the correlations, this is basically what I'm thinking. Considering that I'm expecting chop for yields, at least in the near future, I would not buy bonds here. So that's my thinking. If I see the correlations change, my view will change. That's my current thinking. So I would wait at least for the low of the range and or for correlations to evolve and give me another signal.
Yeah, very well said. I agree partially and on the most part. So yeah, first of all, very well said that if you are buying bonds, you are betting on these things that Raphael mentioned. It's absolutely correct. And for this to change, you need to watch correlations every single day, how they are changing. But now with this positive correlation and with what Raphael said is actually, I would rephrase it that these several things that Raphael mentioned are going up maybe because these bonds are going up, not the other way around. Because now this thing is leading and moving the market. But yeah, regarding buying bonds, I don't expect yields to be really choppy. I expect them to be quite volatile, and but not in a choppy manner, but just in a volatile manner where yeah, buying bonds now is not the best part, not the best place. Check the ranges and execute there if you really want that. Because I will just tell you one thing that and the trends and ranges and the recent moves in bonds prove that those who are betting on that first rate hike, and of course that's one of the reasons why, for example, retail traders would buy bonds. Professionals have other reasons, but those who wanted to front run lowering interest rates, they already bought long time ago, not now. I mean, so if you want to buy bonds just because because the upcoming Fed meeting, I think it's not the time to do it, and wait for the situation to be clear, and if you want to execute on bonds based on other reasons, not as a bet against interest rates and so on, then wait for the low end of the range. I totally agree. That's my view. Ted, what you think?
Like I said, I'm more interested in the shorter end of the curve. I'm interested in the steepener. I think bonds, when I hear bonds, I'm thinking duration. I'm thinking 10-year to 20-year to 30-year, right? I'm thinking notes and bonds. Those, I think, unless we have a drop off in economic activity, bonds are probably well priced here. So we might get some movement within the range. But as the Fed funds rate starts to come down, so long as inflation continues to come down, then we do have an opportunity with the steepener. And so that's my favorite bond trade, but it's really betting on short end coming down. Yes, that's been discounted by the market, but that 3-month bill has been pinned by the Federal Reserve and by Fed funds rate. And so as that comes down, that's going to move money, because money that's earning 5.25 to 5.5 is going to be earning 4.25 to 4.5 in a year's time, or in a 4 months' time, according to the projection. So again, I like the shorter end of the curve in terms of bonds. That's where I'm concentrated. But I do have bond positions across the spectrum from high yield to LQD, HYG. But like I said earlier, not much in TLT.
Yeah, maybe that was just me. That whenever I hear word bonds, I don't think about
I
short-term.
know, it's, I think 20 year, exactly. But I mean, he
Yeah.
said TMF. TMF is triple leverage TLT. So, I mean, you're in it, man.
I mean, yeah,
That's leverage
luckily,
long.
yeah, luckily, lucky for me, it's the first time I hear about the sticker, so it means everything is fine in my. I don't touch this. Yeah.
Yeah, actually, I'm gonna show quickly something to Chris because I know you have access to the script. So if you wanted to buy, so I'm using the N, but this is basically what you would be looking at. So you already know the setup we are looking for in terms of volatility for an asset to be interesting on the long side. You want to see trade of volatility down. You want to see volatility itself down. And on the script here, you can see this is what you get. You have price breaking trend, bullish trend, and then you can see here trade is going with price, trend is going with price. So when you want to position is actually somewhere here. This is when you start to position. We break above trend, we have a retest to confirm. This is when you start to position, and then you just buy any vol spike you get. So here, 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 any retest of low of the range, boom, you buy. So this is when you wanted to buy. So like Vi said, the front run, the move. You could have seen it. So basically, this is the beginning of June, 7th of June. So you can imagine when did they start talking about rate cut? It was much later. So now I can show you the difference. Here on Matrix, if you go to my profile on TradingView, you will find this script. I think it's still there. So here, this is volatility. You can see the difference between what you see here in the box and the volatility that you had here. You know, the gray stuff. Look how small it is, and here how big the bars are. So volatility is much higher, and you can see the same thing here on the vola signal. Look here, the blue line is stuck at the floor. Any attempt to go above to get a bounce is a buyable dip. Now look at it, chop. This is what Vi was saying. Volatility, it's volatile. You can see it. You can see here the blue line. So you have both matrix confirming volatility is higher, and you also have the volatility here in the vola script that is saying chop. By the way, all the scripts are available for elite subscribers and also to subscribers with more than 150 tickers access. That was just a side note because I know he's using those scripts. So you are thinking about adding here while volatility is chop, volatility is back, while you should have been thinking about buying here. There is another question. Stop share. There is another question, sorry, and then we can wrap it up. It's from Fitzroy Kennedy. So hello Fitzroy, long-term subscriber. So thank you for doing this. Vi, would you consider doing a session like this one, showcasing with MFR trading view chart on how you trade options?
I would consider doing that, but only in a manner which is like I did with process review and what I'm looking for and so on, but in a manner that can be understood as some recommendation of trading in a way, in exactly that same way. So yeah, I mean, of course, but one thing I want to mention is that first of all, for trading options, ranges, charts, and so on, is 50% of the thing. Because I can quickly, in 2 minutes, say this, that when ranges and trends give you a bias on a stock you like or whatever, and let's say now in this case it's a bullish bias, close to the end of the range, you want to buy. And you want to use options for it. Okay, good. But you need to watch implied volatility for options. What you can do with those options. Is it a good time to sell puts? Is it actually a good time to buy calls? Maybe also, what are your expectations? Okay, so let's say your expectation is the other side of the range. So you see on TradingView, stock XYZ trades, okay, low end of a range, then $20, the high end of a range, $24. Okay, amazing. So then maybe you want to do a spread to get it cheaper and so on. And all these things depend not on your TradingView chart and range and something, but on what option market is giving you, because option markets and those who trade options all the time, they understand that every day is different, and options market gives you this versatility. But what it means that maybe one day the best way to express that same view would be selling puts. Another day selling puts is not good. Most likely you will want to do some spread or buy a call or whatever. So to answer that, yes, I mean, it's possible for me to do that video, but yeah, it's only like 50% of the picture. And on other days when option market is not giving you anything, based on I watch volatility skew, and then of course implied vol data in general, so which is percentile or rank. We had a video on that with Raphael. I don't use implied volatility premium discount. I can tell you that. I know that a lot of people use it for one reason or another, but I mean, I couldn't find any use of that number in the process. But implied volatility rank, implied volatility percentile, and then the data which can be found in your brokerage platform. So, for example, time-lapse skew, multi-expiry skew, or even volatility smile on the same expiry, because, of course, you want to see where the smile is going, and then you will see that it's better to express that same view with puts or calls, because, you know, you can express same idea with both. So yeah, regarding video, I can do that, but I just want to say that TradingView will not give you a full picture for options. As with anything, this data will give you bias that now it's a good time to buy this. Now how to buy it? Buy outright stock or use options? Well, you will have to answer that question to yourself, because every day is different. But yeah, why not? Sure.
Very good, very good. I can tell that Vi is trying to train me with options, and it would be a nice video to actually share with everybody.
Yeah, yeah, because options. I mean, my main vehicle when it comes to trading my PA, so holding not futures positions where I exit and enter in a couple of minutes, but longer term. So for me, longer term is overnight. So just for people to understand. But yeah, options is my vehicle. I very rarely buy stocks outright. I just don't do it due to capital and efficiency and other reasons. That is nonsense. But it's not every day, and because a lot of people will make that. If I just explain simply that based on range, now you do something with options, people will make this mistake and they will understand. Oh, I will buy. I'm bullish. I will buy a call, or I'm bearish. I will buy a put. Well, in most days, buying a call or buying a put, especially depending on what deltas and so on. But in most days, if you just do that, outright buying call or put naked, most likely you are writing yourself basically, most likely you are buying a position which will lose you money 100%, with 100% probability. Not always, sometimes, yeah. But and like I said, implied vol data and skew and smile and our things tell you what to do with those options. And some days there are plenty of days when in one particular ticker, because of course there are other tickers, but there are plenty of days when I'm interested in one particular ticker. I just check what's going on in the options market, and I say not today, nope. Yeah, but yeah, cool.
Okay, we are good. There are no more questions in the chat.
Yes, thanks everyone. Thanks for joining. Hope it was useful. As always, feel free to send us your questions, and see you all in hopefully 2 weeks. Thanks, Ted. Thanks, Raphael. Thanks, everyone. Bye.
Bye, guys. We
Good night.
see actually each
Bye
other
now.
on Thursday for the ticker hour show.
Yes, correct.
Okay, have a great week. Bye-bye.
Bye.